Finally, I found it. Testing. Need to be a little louder, right? Testing, 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 testing. Testing, testing. 1, 2, 3. Okay. What a day. All right. Future charts. Sideways range. Obviously, a pretty big level here on the Qs. As you see, SPY is stronger. At this point, could make a case that some bears are looking for some lower high action here. But it's been all bulls this week. Getting over some big levels. And then currently even gapping up now. You can see there's been very little hourly consolidation here. Big move down, sideways, bull break, more sideways underneath this POC. Bull break, more sideways, a little bit of a dip. Ball back up, and then you can see on, what was this? This was Wednesday. Slow grind up, a little bit of a pullback. And over some key levels, but now we're here. Now we're way back up here. So, I mean, getting back over this level was huge. You can see that this was an important level right here. So getting over that level was important. That kind of, my opinion, that really swayed the pendulum there. Because you could see that the bulls, as furthest you can go after this big pull down, try to get back there again, big rejection. So you knew there was some buyers, some sellers here, and just didn't show up. So, I mean, you can make a case that you want price to get back under this before you make a bear trade. Or you can take an aggressive top fish this morning. Put slight gap up into this range here. Why is this range important here? Well, this is the POC of this range. just sideways here, sideways here. So there's just clearly, orders all above here. But this is the meat and bones of the move right there. So what the bulls are, from a visual standpoint, what the bulls want to do is they need to clear out this whole entire order book. And that is literally, it can go up to like this level here for the most part, like these levels here. I mean, this is where most of the orders will be. This is where most of the trading happened right here. So people got in here short, they put their stop above here. But the deeper they get into this, the worse it is for the opposing side. But the bulls want to get cleared the order books. And they might be a little fatigued. But gap up rules apply. Gap up rules apply into hourly-ish, which is also a swing high level too. And it's a swing high because this was the lower high, this was the lower low. So this level here is strong. Should be strong anyways. All right, QQQ. QQ slightly stronger this morning as it's gapping up. Really had this tight 15-minute range. So you had this rejection from this level, pull deck, and then no lower high able to be justified here. Straight back over. Back test that level. This was a quick flash crash right here. And then now we are sideways and up. And chugging some more. So SPY is up here. So QQQ is just getting over that November 20th level. Let's see where SPY is compared to that. Yeah, you can see SPY is already above it. So SPY is clearly stronger, but we knew that. So you can see you had the battle here on Tuesday, the bull break. And then on Wednesday here, you had this pullback. Same thing, sort of. Just straight move up. So you have like this battle, and then you have this straight move up. Battle and straight move up. And you know what? Wow, this is very similar. This is actually kind of wild. So you have this battle, straight move up, still bull flag, double top, bear break, no follow through. It'll move up. So again, you have this sideways action, bull move up, 15-minute double top, bear break into a slight pullback, and now we're going up. I mean, it's I've been fighting the bulls the whole time up here. I should have just trusted my levels more. Because this doji bull break of this level here is a big level. If you pay attention, if you say, oh, this doji here off of supply is a big level, demand is a big level here, then you have this bull break over the Vela area low. So yeah, you still have to watch out for the POC. but you see you get over it and then you push back down. Well, where would be your next logical spot to think about where there could be some sort of battle? Well, the last key win, right? Which is, again, the value area low. And if we zoom in, you can see that on the morning of that bear break, when they lost this level and then they V-shaped and fought back, right back to the value area high. So this is, if you're going to be an aggressive bull, that would have been the spot to be. And you do have the candle formation for it too. You have a stair step, you have a bullish engulfing. Put yourself under the low. And like honestly, the way that it needs to really be here is you need to take some off here. You need to take some off of there. All right. Well, so I mean, gap up open ish. Bulls are looking pretty strong again. And like I said, I've been fighting them, and they're. I mean, I haven't been getting killed by any means, but I haven't been doing great. XLF is towards the high of its candle over the close from the prior day. So XLF almost got to its prior all-time high. Kind of a weak doji here, but very small candle. Bitcoin staying strong. Over its no change level, which rejected from here. Held the value area low. Boom. Back over. Once you see this candle, you can play this little back retest here, which is aggressive, but because it's hard to know where to put a stop, then you probably want to get back up here or up here. This value area high. There you go. It's a good look so far. So the hourly chart is going to be important on the Qs. Sorry, on the Fang names, but we'll clearly just set our regular trading hours highs and lows. So up toward the top of the range here. You can see that there was a bottom fish opportunity here for the bears, which worked out. And now we're just kind of tightening up a little bit. bulls are essentially defending the highs of this move. So break and retest. Another opportunity for the retest, tightening up. So here we're kind of in no man's land. Like clearly this regular trading hours high is big level. And I think that it won't be too hard to get to this level here. Now this is kind of a after hours high, but I still think because it is an EQ that this level is important because the bears are going to be using this level as an opportunity to keep it inside of this range. Because I mean, even the all-time highs are pre-market level as well. So be careful with Google because even if you have a bull break here, you're still inside of this equilibrium. So it's not ideal. It's actually better to play it short because at least you have this double bottom low. And at that point, there's three ways to trade it. You could be aggressive with a lower high, with a stock that's all-time high-ish, or you could be aggressive with another bottom fish potentially. You could play the bear break, which, I mean, to each their own. You usually want to be playing bear breaks in like hyped cycles. And I don't think this as of right now, the bears have not been doing much, so I don't know if I love a bear break play. But you can also play a break and retest, or you could wait for the break, the deviation low, and the back test. With the deviation low, you have a range. You have the bear break, no follow through. Basically, inverse and shoulders. You can buy here, or you can just buy on the back test. Back test doesn't sometimes happen. So those are all on the table. Which one is going to happen? No idea. No idea. But I'm trying to simplify my trading, where there's three essential ways to get in. As a bull, buying support, buying the break and retest. Right? And it's that simple. The only thing that you can throw in there that might be a little bit different is if you're looking for like a 5-minute bounce and you're buying the 5-minute high or low. But essentially, you're buying a higher low, which is essentially just a buying support, but you're just waiting for a little bit more information, right? So it's still technically a support buy. It's just not the most aggressive one. A bull break is just buying a bull break, right? Even if it's the high of day being broken, it's still a bull break. A high of day being broke with a back test of that level is a break and retest. Inverse head and shoulders, that could be what's buying a higher low, buying the bull break, buying the break and retest. Like all those things it's just those three things for the most part. And then you add in some conditions, right? Like let's say back burner trade, hourly higher low, looking for a 5-minute back burner. I mean, it's basically just a support buy with in certain conditions, right? So you're saying these conditions have been met. Now I'm buying. So you're essentially buying a support, not necessarily a support level, but you're buying the pullback. So you're buying the dip essentially, which is one of the most aggressive plays because, as you see, you're not really playing at a level. Most of the time, there's not going to be a level there. So it's one of those things where you either don't take the trade if there's not a level there, or you have a certain amount of money you're willing to lose on the trade. All right, NVIDIA here. NVIDIA's been kind of tough to play. It's kind of been beating me up a little bit. I've been trying to use this correlation with Google and NVIDIA to make trades, and it's just been making my life very difficult. So, but it's definitely been correlated. And it is kind of like back in this range here again. This stock just does not want to go down. But we're back here again in this little range, inside of all of this range. I don't even know how big this range should really be, if I'm being honest with you at this point. But we're inside of this range. Here was your break. Here was your retest. Break, retest. Break, rejection from this level here. Comes back in. And then when it finally breaks, it goes all the way back down to the lows-ish. Because you could make a deviation. Hold the lows. Now we're back here again. So it just feels like bulls are just not willing to break. And I really don't even know what to look for at this point. Because I don't know where I'm playing off of resistance and support. It's just getting a little bit choppy. So, I mean, I guess we could go to the hourly and sort of look, and even then, it's just kind of choppy. So it was like this range here. You finally get below it with this bear break, hit support, and then you basically just fall back into the range. You hold support here, and now you're right back in the meat and the bone. So you're just stuck in this range. Range inside of a range inside of a range. So maybe don't trade. I don't even know why I tried to trade this thing the other day. Like the one trade that was good was you back in the range here. You play off of this level here, and then you went to play down here. But Tesla shooting up again. This is the same feeling I had before with Meta, where it's like I wanted to get in, but I had such a bear bias on the broader market that I'm letting this one get away from me as well. Double bottom, aggressively buying. And now the next level to look at is up here. And you can see that this little level here, after this big pullback, I thought it was important. It did reject from this day here. A lot of trading inside here. It went a little bit deeper than we might have wanted, and then it bounced a V shape. Oops. Great. Now I don't know how that one goes. Ugh. I'm so worried about this hourly level, but this move here is still a nice move. But now we're getting back into this range here. And again, I said up here, I said I thought you're going to stop everybody out. So stopped everybody out. So aggressive bulls get stopped out. Then your aggressive bears double bottom. So I mean, this is a very important spot for aggressive bears. You had the high here, and then you have a high here, so there might be some stuff above here. And at that point, like if that level breaks, so you have this lower high, double bottom. This level breaks, it could be just a squeeze potentially. Now I'm getting sucked back into being a bull again. Slowly getting sucked back into being a bull again, as I was a bear for 3 days. So I'll get sucked into being a bull, and then the bear trap will happen, or the bull trap will happen, and then I'll be on the wrong side of that too. So yeah. Tesla, you gotta be careful with Tesla here at this level. As you see, we rejected from here before, but now we V-shaped straight back up. I mean, you'd want at least some sort of sideways consolidation here, I guess. But you can see how rangy it's gotten in here. Amazon's another one inside of this weekly range. Potentially a daily lower high on the table here. We can put the... I mean, this one has a nice setup. Even though the bulls are really pushing it up here. So you have this lower high, double bottom, essentially double top. So it's getting tight in here. So again, there's a top fish here on Amazon. If you think that this could be daily consolidation, looking for daily consolidation, looking to top fish here. Hourly overbought was, a thing around here. Let's see those conditions. You don't now. You don't. You start to look for a pullback. Get the pullback. Maybe look for the lower high. Now you're just kind of a chop fest. But um, yeah, it would be. I mean, it'd be aggressive. So you could either top fish here. So this would be buying resistance, right? Which is basically as a bear, you know, it'd be like buying a support as a bull. So you have your ways and you have your aggressive versus conservative levels. So you could top fish here. You could try to go in the 2 minute and look for a play, but it's going to be on the open, so it's going to be more difficult. You can wait for price to come back down here, and then you buy the support break. Or you can buy the break and retest. You see? So buying resistance, buying the break and retest. All there. The only thing with the resistance levels, you can just set a level on top fish, or you can zoom in and look for some sort of clue. Maybe like a morning push, then a failure, something like that. That's the hard part. But let's say you want to order here. and you want to get down to the low here for starters, and you want a 2-to-1 trade. So you could realistically set it up like this. And you could scale in potentially too to save some funds, and you're still putting your stop over 20. I guess you could just, at this point, you're just kind of putting a money risk here. There's no real true level to play off of. So and you can't limit the order here and put a stop so tight on the morning because the volatility is pretty crazy. What you could do is you could wait for a pop and then a push down and then use that high. But that's sort of nerve-wracking. And what time frame are you using? And are you able to get your stop in time? Like trading inside of this weekly range can be difficult. It can get choppy. Bear breaks can get no follow through, bull breaks can get no, things like that. All right, well, Microsoft here. I mean, it's obvious that Microsoft wants to get back up to here. Microsoft right off its 200 day. Not right off the 200 day. I mean, it opened here, it flushed down, no follow through, and then so it's up a little bit more pre-market or towards the high. And again, downtrend off 200 day hourly is overbought, but the bulls are like, nah, I'm good, I don't care. And like this just seems like the most important level. Sideways range or the valley area, low, rejection, here's your double top, your save, your rejection, and then there your bear break. So these are hard because like if you don't buy the break here, you're just not getting in a trade. I mean, you could look for a 1 minute little lower high here, I guess at that level, but it's just really difficult. So price gets back down to this level. I mean, this is where the break happened, so you would think this is a big level here. And they're having some issues here. But this is a big level, but it's also like priority wise, I just think it's an extension of this guy. Like this is the real support. This is more people getting it, I believe. So even if this breaks, I still think there's issues here. So I think this one is probably the main issue. But I like that's where I have trouble because Both those levels are important. It's just have to let the market tell you which one is more important, but this would have been a nice play here. Here's your retest. You're looking to get in this level here. See, I always want to get on this candle here. I always want to get in on here, which is aggressive. Just scale in here. Even get back down to there is 4-1. I mean, why not just take the trade? It's so crazy. I mean, you're basically taking this break down to the 200-day. It makes it so simplistic. Yet we complicate it like crazy. Where the heck did that thing go? Durr. This Meta got away from us. I mean, I could have just played it long after getting over the 12 EMA. I could have just done that. The reason I was weary about that though was because after we closed above it, we were right at this level here. So you can see in pre-market, we kind of came up, and then now yesterday we were just trading sideways at that level, which is a big level for me. It was this little sideways action, plus it was the last lower high before the move down. Just felt like it was a big level. And then even on the hourly, you can see that it had this little sideways range, bear break, back test, and down. And then you have this little guy here that kind of started all here. Like this little double top was a big level too. Like there's just no denying it. So now there's a bunch of little levels in here. And then you had the bear breaks, you had the high. This was like the no change level right here. And you can see that they had a ton of problems getting it with no change level. I mean, just look, it's there. PLTR. So it's getting a little messy too. Let's check some of these names out. We had oil, just sideways. Not really moving much. LNG, not looking great. IVVD trying to bounce off its 9-day. Next. Yeah, I really want to like this. This is, I think this one's a really good one. Like, I love this deviation play here. Bear break back open. It might not even come back and retest, but I think now that it's over this level here, it doesn't really matter too much because it's sideways range. But I do think that there's a chance we get here. There's also a chance that we come back and touch this first and then get there. So I think there's going to be a lot of buy orders right here. And it looks something like this for at least the start. Sort of in a mush range. This shows a big move up. CCJ had a deviation play as well off of 80. Let's see what it looks like on the hourly. So you have this bear break, you have this battle underneath the level here. And then you have this big move up. So not really much of a deviation. Step back, as you see, it was stronger, right? Like you have this break, and then you have this side trading sideways here, up at the top of this range here. Instead of it coming back down here. Now, honestly, I don't even know what to do with this one now. I think this is an important level here. Oracle down here after rejection of the 200 day after this gap up. Let's see these names. So let's check about Quantum. Quantum tightening up here. Inside bar. Almost a double. You can call it a double inside bar, I guess. Don't love the way it looks. I don't really like when you see this bear break with no follow through in the middle of nowhere. Like you can make a case that it's just fool's gold because the market bounced in the middle of nowhere. I mean, I guess you could say it bounced off of this high here, but it's just a weird little rinky-dink high. Talked to NVIDIA, BMNR starting to go off a little bit here, up 3.5%. And again, it's just like, it's kind of in this mush zone. It's sort of getting over it now. I mean, as much as I like the way that this one looked on this chart, you can't really play it without looking at Ethereum. And I mean, I guess Ethereum had this doji inside bar bull break, so yeah. It's at this essentially this no change level right now. And you can see this candle, this low and BM&R. It's almost like this candle here. So I don't know. Strange. Still just a daily bounce. Looking to get here. And then try to get here. This is an unchanged level. OKLO. 2% move. We're kind of right in the middle of the smush zone. We sort of are at support here. You technically do have a monthly higher low scout. It's not quite at any moving averages. You have the weekly looking for a weekly bounce. And once again, just looking for a weekly bounce. But on the daily here, you're kind of in the middle of nowhere. Like, it's just hard to go long off of here. And you have this candle here. You have this bullish move, so bulls are not interested. Pulls back. Then you have another inside bar. And it's like, are we using this level again as like, hey, bulls are interested? Or is this a sign of weakness? Let's look at the hourly. See if there's anything on the hourly. Some sort of pattern. So you have this rising wedge, bear break, teetering back up. I mean, I guess it's interesting that the bulls show up here. You have this weak rising wedge. So you have the bear break. Looking for the lower high, doesn't happen. Slowly grinds up. So I guess it is somewhat of a red flag where you have this big bear break. And then you have the slow grind up. It's like, okay, well, why aren't we getting more push down there? It's really not off any real support, but you can make a case that this is all just something. After this level here, look at the high, break down. Yeah. But you have the 9-day, sorry, the 12 EMA. Then this one went off on us. Talked about next already. So maybe at AKLO today. How's Netflix doing? Netflix with the inside bar, Barrett bull break with not much follow through. So this was an interesting one, right? Here's your break. There's your double top, but here's your retest coming. Bink. Set the higher low. and then you get stopped out, and then it goes. I don't know how else you get around that. I think you'd have to zoom into the hourly, right? Get this bear break, get the lower high, lower low into a V shape, and then there's your deviation low right there, bink. And then you see how they jumped on top of that, right? Deviation low, stops here, fink, building again to that. They go right back to where the bull break happened, and then fink. So yeah, those deviation lows. It's hard to be bearish and be like, oh, nice, I got what I wanted. And then you maybe start to see the bullish thing happen, but you're just not a believer because you've been faked out before. So that's tough. I mean, you can make a case on the break and retest that your stop should be under this guy because this was the candle that broke bull. So if you're just getting in here, what a lot of people probably did was they waited for the bounce, saw the doji, played the break. So you play the break, you get a nice move up, but then you give it back. So maybe use it as an opportunity to go long again if you're a sicko, because this is the level. You just have to be very keen on what is the most important level to you, and it shouldn't be this guy. This is a level to start looking, in my opinion, but this is the level that invalidates everything. Technically, this is the level that, but this is the second best option. Um, oh, all right. Well, I mean, not much, but it's probably going to be a low volume day. But counter trend. So on the daily, you're still probably looking for lower highs. Technically, on the hourly, the time frames are bullish in the hourly. So kind of neutral daily, hourly bullish. If you're looking for some kind of consolidation, you want to decide if you want to be aggressive or conservative. And yeah, all right. I'll talk to you later.